You're watching Wall Street Confidential. I'm Farnoosh Torabi. Welcome, Jim Cramer.
How are you?
Great, thank you. Now this week we've got the Fed meeting, and also, but some would argue more importantly, we have the big brokerages reporting earnings for the third quarter. A lot of people wanting to listen in to find out, are they going to really disclose what they should be disclosing, i.e.
They disclose everything. I really don't buy that. I mean, it was a knee-jerk article. They don't disclose enough. They disclose plenty. They've always been very honest. They've been downbeat when they have to be downbeat. There's really only one way to play this group, which is that you have to bank on one of them being bad and therefore another one being good. Mm-hmm. So, and by the way, if they're all good, you don't make any money. If they're all bad, you don't make any money. The idea is that Lehman reports something bad. You go buy Goldman out of the money calls or Goldman in the money calls slightly, and with the bet that Goldman's going to be better than Lehman. And why would it be better than Lehman? Well, the answer is quite simply because Lehman and Bear have, Bear's another one that I don't really care for. They're levered to prime brokerage and mortgage-backed securities, and secondarily fixed income, which has been a real problem. I don't think that anyone thinks that more hedge funds are going to be started anymore, and that was the growth in prime brokerage. That was a very profitable business. And I really question whether you can really compare a Goldman to a Lehman or a Bear. Goldman has a much more diversified international business model, much less levered to mortgage backs, much less levered to prime brokerage, although that is an important business. Goldman, now, I am by no means saying business is good. I am saying that at 8 times earnings, these are getting interesting.
Lehman is the first report. A lot of people looking at Lehman as the litmus test, and you're talking about sort of using these guys against each other.
Well, the idea is that maybe Lehman has a problem with fixed income. Now, I got to tell you, Dick Fold's an honest guy. I think you would have known it if it's a real problem. What I'm more concerned about is the secular growth rate of a Lehman or Bear is no longer as great as it used to be. These have always been regarded as cyclical stocks, and suddenly they're back in the cyclical camp. If it's a cyclical stock, then you can't pay more than 10 times earnings. But the interesting thing is that 8 times earnings is something that we saw from the home builders before they went to 5 times earnings. I just don't think that the brokerage stocks are as in bad a shape as the home builders.
All right, thanks a lot, Jim Cramer. I am Farnoosh Torabi for Wall Street Confidential. Thanks for watching.